You know, right now, as we speak, there's this invisible storm of money swirling around the globe. We're talking billions of dollars, euros, yen, all being traded constantly. The prices are always moving, and this invisible force is what we call currency exchange rates. And whether you realize it or not, it's quietly shaping pretty much every part of your financial life. I mean, have you ever noticed how the price of stuff you buy all the time, like gas for your car or a new phone, just seems to be all over the place? It's easy to just blame it on inflation, but honestly, there's a much bigger global story happening here, and it all boils down to the changing value of money itself. These tiny little changes happening every single second, they're what decide the price you pay for petrol, what that new phone that was made overseas is going to cost you, how much that dream vacation will actually set you back, and yeah, even the real value of the savings you have tucked away. This isn't just some abstract economic theory, This is your reality.
All right, let's dive in. To really get a handle on how all this works, we've got to start with the core concept, the exchange rate. Now, I know it sounds a little technical, but trust me, the idea is surprisingly simple.
That's it. That's the whole thing. A currency exchange rate is literally just a price tag. It's how much you have to pay for one country's money using another country's money. No crazy formulas, nothing complicated, just a price. So for example, if you see that 1 euro equals, say, 1.08 US dollars, all that means is it costs you about $1.08 to buy 1 single euro. And that little number, that's the tiny thread that connects every single economy on the planet. Okay, so that leads to the really big question, right? Where does this price actually come from? It's not like there's one person or some government committee setting it. Nope, it's the result of these massive, powerful forces that are constantly pushing and pulling against each other. So a good way to think about it is like this. A currency's value is like a car, and there are 4 main wheels that make it go. And if you can understand these 4 forces, you'll totally get why a currency's value goes up and down. First up, you've got the old classic, supply and demand. It's simple. If more people want to buy a currency than sell it, the price goes up. Second, there's inflation. If a country's money is losing its buying power at home, well, it's going to be less valuable to people in other countries, right? Third, interest rates. Higher rates can be really attractive to foreign investors looking for a better return, which pumps up demand and makes the currency stronger. And finally, number 4, economic stability. A strong, stable, growing economy just inspires confidence, making its currency a much better bet for everybody. And when we talk about demand, it's not just one thing. It's this huge mix of different players all doing their thing. You've got foreign investors buying up stocks, huge companies paying for goods from overseas, tourists just like you needing some local cash for a trip, and even governments themselves buying up other currencies for their reserves. Okay, so we have all these powerful forces at play, 24/7. But where does all this trading actually happen? Well, it takes place in the single biggest financial market in the entire world, a kind of virtual ocean of money we call the foreign exchange market, or just Forex. Just take a second and really look at this number, $7 trillion. Now, that isn't the total value of the market. Oh no, that's how much money gets traded on the Forex market every single day. To put that into perspective for you, the New York Stock Exchange, the one you always see on TV, trades about $50 billion a day. The Forex market is over 100 times bigger. It just absolutely dwarfs every other financial market on the planet. It's not even close. And the reason it's so unbelievably massive is that it's not a physical place. There's no building with a big sign on it. It's a nonstop, 24-hour global network of banks and traders. The market literally follows the sun around the world, moving from Sydney to Tokyo over to London and then on to New York in one huge continuous cycle. So if this market is this massive, decentralized ocean of money, is anyone actually in charge? Well, kind of, but not really. There are guardians who try to steer the ship, but then there are these global shocks that can create tidal waves nobody can control. Generally speaking, countries manage their currencies in one of 3 ways. First, you've got floating currencies, like the US dollar or the euro. Their value is mostly decided by those market forces we just talked about. Then you have fixed or pegged currencies. These are tied to another currency's value to keep things stable. And finally, you have managed currencies, where a country's central bank lets the currency move, but only inside a specific predefined range. And the big players responsible for all this managing and intervening, those are a nation's central banks. You can think of them as the official guardians of the currency, and their main job is to keep the economy from going off the rails.
And these guardians have a pretty serious toolkit to work with. They can raise or lower interest rates. They can buy or sell huge amounts of their own currency on the open market. They can control how much money is out there. And in some situations, they can even put limits on how much cash can leave the country. So, what happens when a crisis hits? Well, in normal, calm times, money tends to flow toward growth and opportunity. But during times of major global uncertainty, a war, a pandemic, a big financial shock, investors panic. They stop wanting risk, they want safety. And they rush to what are called safe haven currencies, causing their value to shoot up while others can fall off a cliff. And that really gets right to the heart of it all. A currency is so much more than just money. It's a reflection of a nation's economic health, its political stability, and at the end of the day, how much the rest of the world trusts in its future.
Which, of course, brings us to one final and really crucial question for our time. As we move deeper into this age of digital currencies and AI algorithms that can trade way faster than any human ever could, the very nature of money is changing right before our eyes. So it really makes you wonder, who are the guardians of this new financial world going to be? Who, or maybe what, is going to control the money of the future? That's definitely something to think about.